Why? I'm continuous learning. I
Sure.
continuously read on my own, work with coaches, go to masterminds, go to conferences, and continue learning something new. And the same with other people. You need to have a start, and then you need to maintain your knowledge and improve it every day so that you become more and more confident in your investing. And that actually, believe it or not, that will help you with whatever you're doing, whether it's W2 or your business, because boosting confidence in one aspect of your life tremendously boosts your confidence in other aspects of your
Mm,
life. It's not
it's
only
contagious.
You're listening to the Accredited Investors Only podcast presented by Accredited Life.
All right, Alina, welcome to the show. How you feeling today?
Peter, doing great. Thank you so much for inviting me. I'm excited to be here.
Hey, I appreciate you coming. So, let's start with the introduction. Alina, who are you? What are you doing? Why are you here? All that kind of stuff.
Why I'm here? I'm here because Peter, you invited me. I guess the invitation came in because we run in the same circles: real estate investor, entrepreneur, um, coach, mom, friend, all of the above. But the journey started 25 plus years ago when I started my professional career after graduating from college, after immigrating to this country 30 plus years ago. So the career started with big accounting for. I started as a tax accountant and never really cared for that. I tried both public and private world and realized that it wasn't for me. So I jumped into the world of information technology, where I spent a significant chunk of my career, enjoyed it very much, but also as a former tax accountant, kept thinking that while mine and my husband's careers were growing, so were our tax obligations and tax brackets. And I kept thinking to myself, there should be a way to lower our tax obligation,
Mm.
uh, not the tax brackets. No, that was all fine. And so in my search, real estate kept coming up, and it took me a long while, but I finally took the plunge, started investing about 8, 9 years ago. I first started investing as a passive investor in the syndications, and then became more active, took an active role as a deal sponsor, and then started buying different asset classes. So at this point, I've been in both residential and commercial real estate. And as luck would have it, during the pandemic, after receiving a pink slip, I decided to become a full-time entrepreneur and never looked back. Love what I do and enjoy it very much.
Nice. That's an amazing story, and there's a lot to unpack there. I always like to ask people that came from like a different background than real estate originally. Was there anything that you learned in the accounting world, and what else you did that you brought with you? Because that's one where there's a crossover. I talked to somebody the other day who was a pharmacist, and like even there, we found some crossover. I mean, we found some foundational things that were learned along the way. But from an accounting perspective, I got to imagine there's some things that you've taken with you. So talk to me about that.
Absolutely. So having that foundation, first a degree in accounting and then working as a tax accountant, even though it was centuries ago, it still gave me a solid foundation and understanding of how the taxes
Mm,
work. Granted, I haven't practiced it for a long time, but I still have an understanding when it comes to reading offering memorandums, executive summaries, understanding when someone presents a project, people look at the numbers, say, oh, 12% IRR, 15% IRR, and they're stuck with that. My first question is always, how is this treated? Is it ordinary income?
mm-hmm,
Is it passive gain and so forth? Why? Because for someone who is in a higher tax brackets, 25, 30, 32,
mm,
and so forth, it does make a significant difference,
sure.
especially if it's an ordinary income.
Yeah.
Uh, if there are losses that are passed over that you can take advantage of and take an offset against your passive income, that's still huge. That impacts your bottom line. So for me, that's really, really important. And even after the tax career, when I went into information technology, I played different roles. wore different hats, but a lot of it came down to being the connector. I connected
Mm,
the world of business and the world of technology, and I do make a connection between that and what I've done in real estate, which is capital raising. When I worked in private equity, dealt with investors and had the investor relations, my role was to essentially connect investors with investments.
sure.
And talking about transferable skills, you wouldn't believe it, but I took a lot of transferable skills from that corporate IT career and applied them to the private equity business.
Mm.
And that's what helped me to make that connection between investors and investments and make it a lot easier for investors to understand what they were getting into. So
Yeah.
definitely a ton there in terms of transferable skills.
Yeah, I love that. I always think it's an important thing because not everybody grew up in real estate. Not everybody spent their early part of their career in real estate and all. So I always think it's important that it doesn't mean it's out of reach. Whether you want to be on the passive side or you want to be on the active side, and there's things that you've probably learned and picked up along the way that you could bring into that business that's going to help in some ways. You mentioned your first foray into real estate was on the LP side of the business. You didn't buy a rental or a fix and flip or wholesale a property or something like that, or
I did. I
okay.
mean, it was more of a now one-off, of course. Yes, we bought a condo, we bought a
Mm,
rental property in Philly, which ended up to be a total disaster, but that's, time for another story. We had everything, you name it, bad tenants that wanted to
mm,
sue us,
mhm,
pipes, squatters. Yeah, that was a fun property. But my journey on a regular basis, if you will, into real estate started when I became an LP, because at that point, once I invested in one, it was more or less like a snowball effect, because
mm,
after I almost immediately invested in a second, third, and so forth, before I realized that I wanted to become more active
mm,
and uh, become a GP at some point, and
mm.
it became a syndicator at one point as well.
What was the catalyst for that? Like, how the LP investing evolve into raising capital yourself and getting more active on the GP side?
It was gradual for me. I was still working my full-time job, raising kids, but the more and more I was reading about syndications, investing, continued to investing and understood the business model and saw what other people around me were doing, I realized that I've been enjoying it. And even though I had a demanding full-time career working full-time, by the same token, I was spending more and more time on real estate investing.
Mm,
And if I'm enjoying it so much, maybe there is a path where I don't have to do both, where I can just become a full-time real estate investor and
mm,
not spend any time in my W-2 career. So that pink slip that came during the pandemic was more or less a blessing. And because my IT job was very cushy and I didn't want to just leave it on the
sure.
table.
Yeah.
So I was really grateful for the opportunity that happened, and not pandemic, of course, but the pink slip.
Sure. There's ways to look at it, right? And the perspective shift and all. And to your point, sometimes when you have that consistent income coming in and the benefits and all that kind of stuff, it can be a really difficult decision to make. And sometimes life has a way of making the decision for you. And I'm sure you were very, very grateful that you had kind of that side hustle for years there and we're doing that. Any advice you could share to somebody who is kind of real estate's on the side. They're looking at it maybe at nights and weekends or in the morning or at lunchtime or maybe even doing it while they're at work, scrolling articles and reading books and things like that. How did you balance all that with kids and the family and all that kind of stuff? How'd you find the time?
I have to admit it was very challenging,
Yeah.
but the decision came relatively easy for a couple of reasons. Number one, I very much enjoyed it. Number two, I had an end goal in mind. My end goal was to eventually leave my W-2 and solely concentrate on real estate.
Mm,
And number three, which is also very important, I looked at my time, I looked at what I was doing, and I saw an opportunity to give up some things that I didn't need to do or didn't enjoy that much or didn't bring me value that much. And I'll give you an example. Like, I used to watch TV shows a lot, and I just decided that it was completely pointless.
Sure.
I did not give up TV completely. No, that, I would be crazy. Well, not crazy, but not for everyone. But I do, but I do watch movies with my families from time to time. But I did give up all of the other time watching the shows, watching the news and everything.
Mm.
Read or watch the news anymore. I only concentrate on real estate stuff. I don't follow politics. I try to stay away from that. But taking out the TV from my time allowed me to put a lot more emphasis on what number one brought value, number two brought joy, and number three helped me get closer to my end goal, which is to become a full-time real estate investor.
Wow, that's powerful insight there, and I love what you're saying, where you had the end goal in mind, and you also kind of identified something in your life that you felt was maybe holding you back a little bit, or so you found a place where you could swap. Instead of doing that, I'm going to do this instead, and then that's going to help me lead to that goal. Now, how did you look at the goal of becoming a full-time real estate investor in those early days versus how you look at it now? Did you think you wanted to be an operator or a sponsor? Did you think you wanted to raise capital for like working with an operator or sponsor? Like, what was? Give me a little bit more detail on that early goal, and then I'm curious to see how that's evolved over the last couple years and all.
Sure. So I've looked and tried different roles within the syndication business, and I've realized that it's not that I enjoy to do one thing or the other, but my preference is usually a combination of doing asset management in addition to managing the investor relations. I could do one of the other, and some of the partnerships prefer to do it that way, but my personal preference to have a balance between the two, because number one, it gives me a better understanding of how the business is
Mm,
performing,
sure.
and I can present it with ease to investors in terms of taking someone else's words and then misinterpreting, for all that matter, it back to investors. And of course, I'm exaggerating a little bit, but in general, I found that working in a real estate business is what gives me pleasure, what I enjoy the most. And knowing the human nature, I do read a lot about human psychology, NLP, and entrepreneurship. Whenever you enjoy doing something, you usually don't see how fast the time passes, because you spend so much time on it and you want to continue doing it. So um, that's pretty much how I look at real estate. Now, you asked about the goals. Yes, my goals have evolved and have changed. And Peter, actually, to tell the truth, they're always evolving, always changing, from what I want to do, what number I want to achieve, to where I want to go. And I see myself giving back more and more, whether it's through coaching other folks that want to become more sophisticated in their passive real estate investing, or doing other types of coaching, or even volunteering. Like, now I volunteer a lot more at the local community. I volunteer at one of my alma maters by helping students with their career developments, and doing other things that
Mm,
bring personal satisfaction and pleasure, because I know that I'm helping someone to become better and helping them to learn from my mistakes instead of doing repeating my mistakes, for them.
sure.
So to me, that gives me a tremendous satisfaction.
Yeah, it keeps you going, and provides some balance too, right? So it's not real estate all the time. You have other things in your life that are important to you. I think that's so important, not to forget about those things, and it just at the end of the day just kind of leads to a more holistic, kind of balanced approach to your yeah, your life and your investing and your finance and just your overall well-being, that kind of thing.
Yeah.
I've known you for raising capital for years, and we've had conversations with what you're doing and why you're doing it and all that kind of stuff. So I'm curious, is there any tips you can share from an investor relations standpoint that you felt have really been fruitful over the years, with raising capital and building relationships with investors and all that kind of stuff?
Yes, I think for someone who is newer to raising capital, what's really important is to learn the skill of active listening. And
Mm,
what I mean by that
nice.
is, number one, do not interrupt the person you're speaking with. And number two, pay attention to what the person is telling you. And number three, try to remember their name and try to use their name in a conversation, because Peter, you know what? When you use their name in a conversation, it makes the other person feel so much more important, number one. Number two, when you listen to them, they even though it could be a one-way conversation where they do all the talking, the person on the other end is thinking that you're the best conversations they ever had.
Mm,
Uh, why? Because you are giving them the stage and they can talk about themselves. And what can be more sweet to another person than to talk about themselves, whether it's sharing about their recent vacation or sharing about their family or how their kid excelled in baseball competition and so forth. People love sharing personal stories, personal experience, just talking about themselves. So let them do that, let them express themselves, and pay attention to what really makes them tick, what's important to them, and you'll see how much faster you can build a rapport with that person by letting them express themselves and share their knowledge and their story and journey with you.
yeah, that's gold. I love that. I think that's such an important aspect to investor relations and the business in general. It's not just asking good questions, but the listening, like you said, and being present in the conversation and the interrupting thing. That's hard for a lot of us. And this
Yeah.
podcast has helped me, I think, in a lot of ways with that, because it's so many times you feel like you want to say something or something connects with you, all that kind of stuff. But that's part of the listening, right? If you ask a question, let somebody answer it. And sometimes too, if you pause a moment, I used to do that in college when I used to do like TV and reporting stuff, where sometimes you get the best soundbite after the initial question. Yeah, so let the person say whatever they want to say, and then if you pause and kind of have that awkward, be present in that awkward silence. Sometimes what comes after that is the real information, and you really get to the nitty gritty. So I love that. Another thing that you mentioned from an investor relations standpoint that I think people miss sometimes is the asset management side and understanding the business. I thought that was absolute gold, because I think to me that's important when I'm talking to somebody, to understand what their role is on the team, and to because this way it's just like I don't have an expectation that they should know every answer. I always think it's important with investor relations. Chances are you're not going to know every answer, and you want to be able to say, I don't know that. I mean, let me get back to you on that or something like that. It actually gives a great reason to have a follow up, that kind of thing. But I love what you're saying with just understanding the business and all. How do you go about that? Is there any tips you can provide there, with just because sometimes it takes time, right? And you've been in different asset classes and things like that over the years. Is there anything you've done that's helped with that, or sometimes it's just timing and sticking with it, right?
Peter, yes. First, I wanted to compliment you on being an amazing host. You're doing a fantastic job on being patient, on listening to the person you interview and asking incredibly great questions. So, kudos for doing that. And in terms of your question, um, whatever you want to become best at, there are a couple of things and steps that can be taken and done. First of all, yes, you can learn from the books. Second of all, one of the best ways to learn is to learn on a job. So just
Mm.
start doing it. And third, surround yourself. Find the people that are already doing it and doing an excellent job, and simply ask them questions. So if let's say you wanted to learn asset management, just find others that are doing asset management for a long time right now, and interview them, offer to take them out for lunch, out of respect, or do it as an interview for a podcast, but do it in a way that does not impact their schedule, number one, and number two, you're giving something back to them in return. You're not just taking from them, but you're a giver as well. And when you do that in a way that's essentially helping both of you and the person you interview, they take a notice of that and they want to give more to you.
Huh.
Uh, and that helps you to learn again from their experience and to start implementing it when you're already on a job and doing that asset management or other role yourself.
Mm. So, would you also say, because I want to talk about the book you currently wrote, the educational side of educating the investors on what the strategy is, the company, all that kind of stuff, and then just a kind of education beyond just the deal as well, right? So, talk to me about the book you've written recently, what it's about, and what you provide and what you share in that book.
Absolutely, Peter. So my book called Your Legacy on Main Street, it follows my journey, and I do talk about some of the journeys of some of my clients. It's basically about how you can start with nothing and build wealth, and have a well-balanced, diversified portfolio that not only includes Wall Street but also includes Main Street. And what do I mean by Main Street? Main Street, and not just me in general. Main Street means anything outside of Wall Street. So for Peter, for people like you and I, it's primarily real estate because that's what we invest in. But in general, Main Street includes not just real estate, but businesses, anything that you can buy or invest outside of the stock market includes Main Street. And my main message through the book was, number one, you want to start investing in Wall Street and in Main Street as early as possible. And number two, which is a critical step, before you're going to start investing, there are certain things that you need to do with your own personal and financial life before you can start investing. And what my book includes is the 7 steps to financial well-being that I built on my own, and they're built based on my personal journey. And they include such things as, first of all, getting rid of the bad debt, only keeping the good debt, making sure that you have money set aside for a rainy day. And then when you're ready to start investing, only have the money to start investing that you're willing to, number one, invest for a very long time, and number two, be ready that all investments are risky and there is a probability that you may lose all your money. um, if someone tells you that XYZ investment is safe, then run away, because there are no safe investments, not even FDIC insured CDs, because what we learned, the banks may be here tomorrow and some banks may disappear, and may be here today and then disappear tomorrow. That may happen too. Granted, yes, they're FDIC insured and all that stuff, but the bottom line is, just be prepared that everything has risks. And in order to invest, you as investor need to understand your own risk profile, and be ready to invest based on that risk profile.
Mm.
Your risk profile would be gradually changed based on your age, your family situation, your short-term and long-term goals, and your overall wealth. But you should always know where you stand in terms of the risk profile, and whether the investment that you have in front of you that you're reviewing matches your current risk profile or not. And only go based on that, beyond, in terms of doing due diligence and educating yourself. But the main idea of the book is to educate yourself first, understand how to passively invest, understand about the different consequences of passive investing, and learn before diving in. But once you dived in, once you know all the fundamentals, start investing. And what's more important is continue learning, because you learn, the more confident and the more sophisticated you become in your passive investing. And it can absolutely be done while you're continuing with your W-2 career or maybe managing a business. It can definitely be done on the side. You just need to have that upfront learning curve, and you can do it on your own through books like mine, Your Legacy on Main Street, or you can work with a coach, someone who will help you to get through that shortcut much faster by doing one-on-one coaching, sort of like I do with my clients that want to become more sophisticated in their passive investing, and giving them the fundamentals up front so they can go ahead and start passively investing and build that passive income for their families.
Wow, I love that. That's so in line with a lot of the things I talk about on the show, and I think it's one of those things that people forget. It's like they skip over the fundamentals. It's getting down to the basics. It's like shooting free throws or layups or something. It's just one of those things where, and sometimes I think if you're an accredited investor, even if you're not, if you've been around for a while, you forget sometimes of just getting down to the basics. And if this is the Main Street side of it, is something new for you, like you said, there's fundamentals, there's things you need to understand, and there's kind of basic things you need to educate yourself on, and that's going to help build confidence. But I also like what you're saying about is you do have to pull the trigger eventually. You got to take some action. You're never going to know everything. I've been doing this for 10 years now, and there's still things I learn every single day doing this podcast, reading articles, books. It's just there's so many different flavors of real estate investing. There's so many different aspects of every single type of real estate investing. So it's going to compound over time, and it's going to, as your education evolves, as your network evolves, and as your experiences evolve, it's going to grow, and it's going to take you in different ways. But to your point, it's like you have to start somewhere. And so I didn't realize you had coaching clients and things like that. What is that? So somebody that comes to you, what does that look like? Or what are some of the questions you have to ask? And because I feel like a lot of this, and I talk about this all the time, it kind of starts with like a life assessment, right? It's like you have to assess where you're at in order to get to where you want to be. You agree with me?
100%. Yes, Peter, excellent point. You do need to look at both personal development and your learning curve in terms of real estate investments. And for my clients, it's really how much time do I have, and how much time do I want to spend to learn the passive investing fundamentals, and when do I want to start investing. So we typically first start with assessing where they're at and where they want to get to, and then go through the modules that I've put together. Again, everything's based on my own personal journey, and I cater the pace and the approach based on clients digesting the content and based on their understanding. But I take them through the materials so that they are ready to start investing. Will they become experts after working with me on that foundational content? No, I don't think so. I don't even consider myself an expert, because I'm continuous learner. I
Sure.
continuously read on my own, work with coaches, go to masterminds, go to conferences, and continue learning something new. And the same with other people. You need to have a start, and then you need to maintain your knowledge and improve it every day, so that you become more and more confident in your investing. And that actually, believe it or not, that will help you with whatever you're doing, whether it's W-2 or your business, because boosting confidence in one aspect of your life tremendously boosts your confidence in other aspects of your
Mm,
life. It's not
it's
only
contagious.
yeah,
Yeah.
no, yeah, it's contagious. It's not only what I've seen, but I've read about it. It's incredible, because that personal development helps you escalate your progress in other areas, simply because you become a lot more advanced in your knowledge. And number two, you start surrounding yourself with people like yourself that are also eager and anxious to get to the next level. So that helps in personal development tremendously.
Wow. Yeah, I love what you're saying there because I think that's such an important aspect. Another thing that kind of I think the average folks kind of miss, is it's like the unseen side of things, and so many times in this space we can want to think so logically about, the underwriting and the due diligence and the analysis and all those kinds of aspects of it, but having your head on right, and thinking of things the right way and the right mindset, and just that's such an important part. I was really fortunate when I was introduced to this whole world, and I've said this a million times on the show. Was one hand was Rich Dad Poor Dad, so that got me thinking differently about money and assets and all that kind of stuff, which so many people have been introduced to over the years. And then there's on the other hand, it was Earl Nightingale's The Strangest Secret. So it was just like just completely thinking differently from that aspect, and just not thinking negatively, and looking at your thoughts differently, all that kind of stuff. So I love what you're saying there. It's just right on point. We definitely share that in common. What would you say, or how are some other ways that you work with investors?
Um, Before we get to your question, I wanted to mention something because I don't want to paint this rosy picture for your audience and tell them that everything is hunky-dory and always going well. Real estate in general is like a business. It is a business. So there are ups, downs. And regardless whether you become passive or active, you need to be prepared that there will be ups and downs. For example, we're going through a real estate cycle now where it's been a seller's market for a while, and it's a lot harder to find assets that are cash flowing. And while we see the transformation towards becoming the buyer's market from I'm sorry, I don't remember what they said, but it's been seller's market. We're going towards the buyer's market gradually, but I think it's going to take at least a year or two till we get there. So there are some challenges on the way, and there are challenges for passive investors too. A lot of people are seeing either partial or full loss of capital in their investments because they invested in 22, 23 when a lot of sponsors were buying with a floating rate and now
Sure.
cannot afford to hold the assets or giving it back to the banks. So that's all part of it. But you need to be prepared that stuff like this will happen, and it's only a temporary obstacle. I'll give you an example. One of my past clients told me that years ago in his early career, not early career, but when he just started investing passively, he came across a sponsor who essentially set up a Ponzi scheme. So he started investing with him, everything was fine. And then 3, 4 years later, things started going south. So eventually, he and other investors found out that the sponsor was setting up a very sophisticated Ponzi scheme. My investor lost a bunch of money in this. Did he give up completely? No. He put that aside. He took a little break, but then he went back into the game and he continued passive investing. Yes, he could have stopped altogether and say, "I will never ever invest in
Sure.
real estate," but he understood that this was just a temporary obstacle, and there are other good sponsors, and he continued investing. So keep that in mind that things like that may happen, but you have to be open-minded and you have to continue learning and continue looking at the opportunities. Now back to your questions in
Well,
terms.
let me just interject there, Elena, because I love what you're saying, and it's just it's you're very humble and very practical, which is like it's something you don't see that often in this space, right? There's a lot of people, especially with the social media world, that LinkedIn and Facebook and Instagram and TikTok and all creates, where I think in order to get attention and to get likes, you have to be very matter of fact and all that. Exactly. You hit the nail on the head there. And it's just that's not real though. You know what I mean? Like, so you're probably like me. It's like some of that stuff it turns me off, or it makes me weary. You know what I mean? Like, and I'll never knock anybody for, I don't like to, if somebody's good at what they do, and they're good at marketing and sales, and they can get, a lot of likes and a lot of shares and get that kind of virality, or whatever word you want to use. Then I'm not one to knock them for that, but it always just makes me look a little bit harder, you know what I mean, to make sure that execution side is down, because that's such an important aspect. And sometimes the people that are really good at the marketing side and the capital raising side, I always want to know, because the skill sets are different, that with the sales and the marketing, and like you said, that the kind of the loudest guy in the room mentality is different than what I've always seen with the analytical execution side that really gets the job done at the end of the day. I think that's so important. So I love what you've been saying, and just like about the educational side, and just, you got to have constantly educating. And I appreciate you telling that story too about the client you had with the Ponzi scheme, because there's so many people that would say, all right, I'm done. You know what I mean? I'm never going to do this again. People do it in the real estate world all the time on the operation side. They buy a rental, or they, they make a loan, or they do whatever it is, and it doesn't work out, and they just say, all right, I'm done. I'm never going to do it again. But you can look at it differently too. You know, like he had a different mindset, took a different perspective. You sit back, you reflect, you learn from your mistakes, and you move forward. Not everybody can do that, but I think if you want to be in the space and all, and like you said, kind of, that the goal side of it and the vision side, it evolves over time. And maybe it's not for everybody. And as you get into it, you lean more towards Wall Street, or versus Main Street, or vice versa. But I love what you're saying there. So, any other thoughts there, or let's move on to, just, I'm curious to how else you work with clients.
Sure. In terms of how else I work with clients, is whenever we have projects where we're able to bring investors, we always open it up, and we have a priority list depending on the people that we know and we enjoy working with. We put them on that priority list, and they're the first ones that hear about our projects. And then just staying in the know. I'm relatively active on LinkedIn and somewhat active on Facebook. So if people reach out, or if anything in my posts resonates with them, they always comment on those posts. And I've got a lot of people reaching out to me lately after they read my book, and
Sure.
thanked me for writing the book, because they said that opened up some opportunities for them. They decided to take action and now start investing. So I'm happy to hear that I was able to help some folks to start building their wealth, and building their legacy for their future generations, because it's not just important to build wealth. For me, it's more important not just to pass the money to your kids or grandkids, but what's more critical is to teach the next generation on what are you passing to them and how to manage it,
Yeah.
because it's a lot easier to lose all the wealth than to make it or make it back. That's why it's very, very critical to educate the kids and grandkids on how to manage that wealth, and how to wisely invest it.
Mm. So let's spend our last few minutes. Anything? What do you like right now from an investment standpoint? How has that evolved, and what are you looking for? What are you looking at? What excites you in that arena?
Sure, sure. I was in the multifamily world for a long time, and I felt like I needed further diversification for myself and my clients. So I moved into the triple net world. We are targeting medical offices, regular offices, flex industrial space these days, primarily in Midwest and a little bit in Southeast as well. What attracts me, these assets are a lot less management intensive.
Mm.
Uh, they still have different value add components. It could be extra land that you can build on, it could be vacancy that needs to be filled up, or it could be under market rent. So from that perspective, they're very similar to multifamily in a commercial space. But I also like the aspect of being a lot less management intensive, because that
Mm.
allows us to either not hire the management, self-manage it, or hire the management only where it's needed, where there's a lot of tenants that need to be managed, or it's far away and we don't have the boots on the ground. So those are the primary asset classes that we're targeting for now. It's triple nets.
Awesome. Well, we could talk a lot more about that, but I don't want to take up more of your time. This has been a great conversation. I think it leaves people wanting more too. So if people want to learn more about what you're investing in, if they want to learn more about your book and the coaching and like how can they interact with you? How can they get involved? I know you mentioned LinkedIn and stuff like that, but is there any other ways that people can contact you?
Sure. Yes, they can find me on LinkedIn or Facebook, or they can just type my name, alinatrigub.com. That will bring me to my website, which is SAMO Financial, but my name will get there.
Okay. And we'll put the links in the show notes. Alina, this has been an amazing conversation. I really appreciate you coming here and talking to me. And I've had a lot of fun with you.
Thank you so much for inviting me, Peter. Peter, I very much enjoyed it.
Thank you.